Hey everybody, welcome to Trading Capital's daily analysis video. Today we're going to be discussing natural gas. So jumping into the natural gas chart here, overall you've clearly know our perspective on natural gas. We were bullish, but we've changed since then. Our members were able to exit nat gas with a break-even stop loss at that 186 zone. We did take profits around 11, 12, 13% around above that $2 level. So what's next for natural gas? Well, there's a couple things that we need to point out and really dissect. I'm leaning more bearish now on natural gas in the short term. Long term, medium term, I'm still bullish. I still think by the end of the year we can push $3 to $4 in nat gas. However, in the short term, if you're a little bit of a stickler for price, you could be shaping up for a little bit of a new low or at least a double bottom retest. Why do I say that? Well, first things first, nat gas did have this breakout here above this trend line. You can see it got a big bullish engulfing candle yesterday, all to be rejected today. So right now this pattern is looking like a little bit of a failure, intraday failure. So that does open the probabilities of a gap fill test at 168, double bottom at 160, and then potentially even 140. But when you look at this pattern now, you're potentially shaping up a little bit of a head and shoulders. You have a left shoulder, you have a right shoulder. If you break this neckline here, you could actually have a flush on natural gas, another 16% down move. Not what a lot of bulls want to be hearing because natural gas is still depressed at this zone. It is the most oversold commodity in the entire commodity-based market at this point in time. Definitely having a clear downtrend at this point in time. Still lower highs, lower lows. So if nat gas breaks this trend line, you could have a move all the way down to 140. Just because the downside target says around 140 off of this invert or off of this head and shoulders pattern doesn't mean we actually have to fulfill that downside target. There's still a lot of support in this parallel channel. You can see this parallel channel, if you were to fall for the coming days, could take you to about 148, 140. So watch this parallel channel because it will act as a very big support level in the coming sessions. So the fact that natural gas is seeing a little bit of a bearish breakdown into the end of the week is not a positive sign. Today it was up, trying to gain positive momentum off of that daily bullish engulfing candle, and it got rejected. Not what you want to see. Weekly chart, also 2 consecutive down weeks currently in a row. So it does look like natural gas wants to head lower. Another thing to put it into bearish alignment is the fact when you throw on the 20 and the 7-day moving average, the 7-day is in yellow, the 20 is in blue. Blow up this chart. We just got a bearish crossover of the 7 and the 20-day moving average today. The 20-day moving average closing at 182, 7 closing at 180. That's a bearish cross. Just like you got a bullish cross here, which led to further upside, we've now got a bearish short-term crossover of these short-term moving averages. Take a look what happened when you got the bearish cross here. Big sell-off. Do I think we're going to have a sell-off like this? No, I don't, but I do think that it could push nat gas prices lower. Same thing over here. Bearish cross, big sell-off. You got the bullish cross over here, big rally. So pay close attention to these key 7 and 20 moving averages because they often will give you a little bit of a trend to trade and often can protect you if you're long and you start seeing a little bit of a technical breakdown. So nat gas at this point in time is looking unfortunately very weak and likely to push lower. Now, if for some reason nat gas next week gaps up above this 186.22 level, that is a bullish signal to go long in my opinion, and it likely still could push up to the 226 target. But the probabilities are dictating another leg lower in nat gas, and that's kind of what the RSI is. I'm actually looking for a divergence to occur. I'm looking for this RSI to keep higher lows. So here you have your low, here you have another low. Here you can see you have your low pivot here. You put another lower low in price action, but a higher low in the RSI. I think the RSI is going to dip one last time back into this oversold condition, back into this trend line of support, maintaining a higher low pattern where the price action makes one more final low. That's what I see shaping up at this point in time. Obviously, one thing that's interesting is you actually have the DBC, commodity-based ETF, breaking out. So this ETF is showing that all commodities are breaking out across the board, whether it's uranium, oil, gold, silver, copper. Things are breaking out across the board in the commodity-based sector, so it's only going to be short-lived that I think nat gas sees weakness. I do think nat gas will likely push higher. Now there's one pattern that I do want to bring to your attention, okay? Nat gas, if you go all the way back up to your little highs here, nat gas you can clearly see triggered this head and shoulders pattern, right? Head and shoulders pattern triggered all the way back here. That downside calculation from this top of this pivot high down to your neckline is roughly we can actually draw it in here, roughly a 46% decline. You extrapolate that forward and actually carry it over to the neckline. Let's just actually do that, just live right here. So you extrapolate that forward, and we draw it down to the neckline. You can actually see the downside target on nat gas of this bearish pattern could take you all the way down to 73 cents. Now, do I think we're going to get hit 73 cents? I don't, but just be aware that there's always a kind of case for commodities to overshoot to the downside and to the upside. So again, a pattern does not have to fulfill a downside target, considering nat gas has had a precipitous fall, but just be aware that there still is a lot of bearish price action in this particular commodity. And one thing's for sure is there are a lot of people that are over levered. There's a lot of people trading these BOIL ETFs, even shorting KOLD. And market makers like to grab that liquidity. Nat gas is a popular commodity to trade because it has extreme volatile moves. But at this point in time, I do not hold a position, and I'm looking to accumulate and re-enter lower unless we get some sort of a big rally up above this 186.22 zone. On that note, thank you all for tuning in. Please give this video a like down below, and we'll see you on the charts a little bit later. Enjoy your weekend.